Welcome to another broadcast of Real Turkey Channel, presented by Atilla Yeşilada. Soon we'll have our 200th broadcast and become one of the longest running YouTube channels in English from Turkey. Today we're going to talk about Turkey's phenomenal currency collapse. I'm broadcasting this at roughly 4 a.m. Istanbul time, simply because our beloved President, Mr. Erdogan, has a habit of issuing executive decrees, executive orders at midnight. So I can't really sleep. I want to wake up very early to see what he has concocted last week. To motivate the subject, let's look at what Reuters said about Turkey's currency collapse. The Reuters article says waters are last break on Turkey's lunatic express. That's true. We are on a lunatic express that's leading us to complete ruin simply because Mr. Erdogan is conducting an experiment on inflation and interest rates using 85 million citizens of Turkey as test subjects. Here are a few more articles I selected from Google by simply keying in Turkey currency collapse. You see we're everywhere. We're in Wall Street Journal. BNE IntelliNews is a source I would highly recommend. It covers Turkey and Balkans. It is written by Turks and people of Balkans, and they are very close to the ground. And here, just to show how widespread this phenomenon is watched, is a report by Assume Tech. I don't know what this website does, but it found it important to cover Turkey's massive economic collapse. So let's take a look at what we're going to do in today's video. Turkish Lira lost more than 40% of its value against major currencies. That's very unusual for an economy which has not suffered a natural disaster like an earthquake or has been invaded by aliens. We are not at a war. There is no major scarcity in the country. So one wonders what makes Turkey the worst performing currency against the dollar in the emerging markets universe. Well, it is Mr. Erdogan's crazy monetary experiment. First, I'm going to explain the experiment, then I'm going to try to answer the question of why is he doing that when he sees that the experiment is leading him and Turkey to ruination. And of course, the most important parts, the gist, the money shot of the video is where do we go from here? While I explain that, I want you to watch out for two important events which could cause immediate disaster, which is Ankara slapping capital controls on Turkey and bank runs. I will explain what all of this means. A story like this is actually very simple to Turks who know Mr. Erdogan's antagonism to interest rates. Mr. Erdogan is a devout Muslim. According to his creed, usury is forbidden by Muslim holy book Quran, and therefore he should eliminate interest rates. He also concocted a crazy monetary theory. He not only thinks that usury is against his faith, he claims with strong determination that lowering interest rates will also lower inflation. How that works has never been very clear. No one from Mr. Erdogan's strategy team has articulated how the mechanism from lower interest rates to lower inflation runs. Well, we found out. On 18th of November, Turkey's central bank cut interest rates another 100 basis points. Here we go. So that the policy rate is now slightly lower than inflation expected in the next 12 months, which means Turkey's real rate has become negative. In fact, given the observation that over the years the inflation expectations have always proved too sanguine for reality, it is to be estimated that Turkey's real rate is at one of the lowest points in its history. Let me show you. Here is another uh, chart. This is from Mr. Hakan Kara, a respected academician as well as former chief of staff for central bank's research department, and it shows what Turkey's peers in the emerging market universe have done over the last 6 months. You see, countries like Brazil, Russia, Poland, and Mexico, which are in the same league as Turkey, have increased their interest rates in response to runaway global inflation and Fed reducing the size of its balance sheet or monetary tightening. Turkey has gone across the grain, and as a result, let me show you the table here. Turkish lira has declined. Here you can see it, exchange rate against the basket. Turkish lira has declined a massive 40% in the last 12 months and 42% since the beginning of the year against a basket consisting of dollars and euros. Okay, so the official theory behind this madness is that if the central bank lowers the interest rate, companies will borrow more, invest into new capacity and production, which will boost exports. Turkey's current account deficit will turn into a current account surplus, which means the Turkish financial system will take in more foreign currency than it sends out in terms of imported materials. Well, if you have ample foreign currency and not enough Turkish lira, the law of supply and demand suggests that the price of dollars, that is the exchange rate, will fall vis-a-vis the Turkish lira. Why is that wrong? Well, first of all, um, cheap credit is not the only or even the primary determinant of private sector capital investment. You need better regulations, you need expectations of higher demand at home and abroad, as well as trust in the government, i.e., Mr. Erdogan, to engage in a capital investment boom. None of these things are present in Turkey. Turkey's current account deficits are driven by two phenomena, which are actually the same thing, but for those of you who are not economists, I will tell you separately. First, we have a chronic savings shortage, which means the savings of the people of Turkey are not sufficient to drive economic development. Therefore, we must constantly borrow from abroad, which is the current account deficit. Two, Turkey has very low total factor productivity, which means if you mix 1 unit of capital and 1 unit of labor, Turks produce less each year. To be competitive in the export markets and to develop rapidly, you must have steady growth in total factor productivity, which hasn't been the case in Turkey since 2014. So there is really not that much of a connection between interest rates and the current account balance, but the central bank has to advocate this theory to find a cover for its relentless interest rate cuts. So this is the situation, and we need to understand. Let me go back to my cover here. We need to understand why Mr. Erdogan is doing that. As I've said, he's a devout Muslim and he has his own theory. But you see, when our expectations are not matched with reality, we change our views. This is what makes us human. We're not driven by our reflexes, we're driven by thought experiments. And even if he is a devout Muslim, he should have seen that his experiment is causing runaway inflation, massive uh, disturbances in income distribution, and all sorts of other ailments. At the end, it could cost him his political career and the prosperity of Turkish nation. Why he is doing that? Well, the best theory, which also started finding acceptance in Western circles, is that he may be mentally ill. I'm not saying he's crazy or anything like that, but he might have signs of early dementia in the sense that his mind comes and goes. And of course, as our age advances, we become more capricious and more stuck on our theories rather than checking them against reality. Um, if this is correct, then we should expect this experiment to run its natural course, which is disaster, simply because nothing he sees or nothing his advisors tell him would compel Mr. Erdogan to change his opinion. He will believe until the very bitter end that the experiment is working or will work in the next 24 hours, and in the meantime, drive the Turkish economy to the ground. So, both to the most important question, where do we go from here? Well, the consequences of his crazy experiment are massive, they are multifaceted, and they not only affect the people of Turkey and Turkish economy, but also the political equilibrium in the country and even the fate of emerging markets because of something called contagion. Here is my table. Well, the first result of Mr. Erdogan's monetary experiment is runaway inflation. Officially, Turkish inflation is running at 20% per annum, but according to several surveys, people on the street think it's more like 30%. Never mind that. Even if it is 20%, this constant depreciation of Turkish currency will drive it up successively simply because Turkey is importing a lot of energy, raw materials, and investment goods, the prices of which constantly increase, thus stoking the inflationary fires. In fact, currently I and our research team work with 25% inflation next year, but it could be as high as 30%. Of course, the depreciation of the currency and the resulting inflationary boom disturb income distribution in the sense that there are people who live on fixed incomes and small savings in Turkish lira who constantly lose out to those who can determine their own salaries or prices and who have stashed away their wealth either in real assets or abroad, say in Switzerland. And of course, I'm sure you're all familiar that in nations where income distribution deteriorates rapidly, there is always social unrest. Another important consequence of Turkish lira's collapse is that scarce resources are allocated not to productive ends but speculatively. Currently, there is a huge housing boom in Turkey simply because people cannot get a real rate of return on their financial investments. So they are withholding their savings from the financial system and investing it into houses, property, empty plots, even second-hand cars, actually real assets that will not lose their value as inflation soars. A parallel phenomenon is observed in the Istanbul stock market, which is having the best rally of the year simply because stocks offer an upside against inflation. In other words, if you buy stocks today, they may not appreciate immediately, but at the end, they represent the value of the companies behind these stocks, and the companies are real assets. While over the winter, Turkish economy is very likely to enter a recession simply because people can no longer spend money uh, on necessities or on luxury items because inflation constantly erodes the purchasing power of very large segment of the nation. You may wonder just what percent of the nation is on fixed incomes or considered low income classes or middle income classes. I would say roughly 60%, judging from several surveys. So, this is a massive shock to domestic demand. And of course, when no one is buying goods and services, then the economy goes into a recession. Another problem is shortages of basic goods. Put it this way, Turkey is an energy importer and it's part of the global supply chain. So almost everything that's produced domestically has an import component. Well, now this the import component has increasing costs every day, and at some point these costs must be reflected to the final price. But the price flexibility of every good is determined in the sense that if I, Attila Eşlada, raise the price of my services too much, I price myself out of the market, which means no one will buy my services at that price. And that's what's happening in Turkey. Companies are looking at their income statements and they make this basic calculation. This is an example. Look, my costs have increased 30%. Since my profit margins are already very small, I must reflect that to my final price. But if I raise my final price 30%, there will be no demand for it. As a result, they simply quit production or they hoard their imported inventory, hoping that this crazy experiment will end someday. Social unrest is another problem. As I've said, we have several examples, both across time and across countries, that rapid deterioration of income equality and high inflation cause massive protests. The Arab Spring is a good example of that. But during the pandemic, several nations which suffered from chronic income deficiency and high inflation have also poured out to the streets. Latin America is a good example. Cuba is a good example. It happens almost everywhere. And there is reason to expect that Turkish people are suffering so much from poverty that at some point they'll pour to the streets to protest Mr. Erdogan's policies. And of course, this is also a shock to Turkey's political equilibrium. And the only way out from this experiment is early elections, though it's not clear how early elections can be brought forward. If you want to know more about the prospect of early elections, I have broadcast another video. It's right exactly down here. I think they will take place in April or May of 2022, but most experts think they will be held later, probably by October 2022. Until then, either someone gets to Mr. Erdogan through the dense fog in his mind to tell him that what he is doing is not only destroying the nation, but his political career as well. This experiment will not end. There is no end to interest rate cuts, and the consequences on currency depreciation are massive. Recently, Societe Generale, which has a very good Turkey research team, has upped its year end 2022 dollar TL forecast to 13.5. Today, on Monday, dollar TL is trading at 11.2, which means, God, there would be another 20-25% currency depreciation, which would just kick inflation up another 10%. I think there is a deep irony in this, in the sense that Mr. Erdogan's experiment is drawing the attention of the world on Turkey, which is good for Turkey and this YouTube channel. On the other hand, the rapid and massive empowerment of Turkish people is extremely sad, and we should really watch Turkey very closely to see whether people will put up with an authoritarian regime, with a one man regime, even if it is constantly driving them into deeper poverty. My humble opinion, they won't. People are the same everywhere. Regardless of how ruthless the regime is, It has the basic duty of feeding its people. If it doesn't do that, it will not exist. I want to thank you for watching another miserable and dark video by Real Turkey channel. If you like it, please share or subscribe. I really enjoy your comments and I shall continue to broadcast as long as Turkey is a topic of interest in the world. Have a good day. This has been a presentation of Real Turkey channel by Atilla Yaşalara.